Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently up 3.44% to 3155. Ethereum up 2.44% to 2010. Each day I run through the crypto market to give you an understanding of how the different sectors are actually performing. This one is DeFi. And we can see financial services is basically green. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. Please consider sharing and liking this video, and also subscribing to the channel. We would love to have you as part of our globally extended KS family. It's really valuable to go through the crypto market in this way, and especially to do it daily, because you can look back at any particular episode and see what sectors were moving. I've left helpful links in the description of this video, such as the Masterclass, our NFT collection, the tax software I use, and you can get a 20% off discount. And you can always reach out and directly message me on Twitter. I'm still on my honeymoon. I'll be back near the start of next week, but just to let you know. If you're going through a life pullback at the moment, please know our community's love and healing thoughts are with you. You're not alone. There's always hope, and the sun will come out again. And there is no step backwards without 2 steps forwards. As a community, we focus on positive excellence, and this is all about understanding and contextualizing money. Money is the result of doing the right thing. When money becomes the central focus of somebody's life, they actually lose their path. Money is an unlimited commodity, and there's a problem. There are people so poor that the only thing that they have is money. They don't have inner peace, they don't have outer peace, they're competing with everyone, and they feel unworthy. That's why we focus on positive excellence. That's all about kindness, integrity and decency, gratitude and happiness. A lot of people think that kindness is being weak. It requires a lot of strength to be kind in an unkind world. And it's also kindness based on strength, boundaries, courage and honor. In the Masterclass, we do deep dives on different sorts of thinking, and rich thinking is completely different to wealthy thinking. Rule 219 is really important at this time. Be kind to yourself. It's important every day. Be kind to yourself, and also, it's ancillary, be kind to others. It's really important to go through this world being kind. Many people are unkind. They pick fights, they get into conflict, and they don't know why their world is crumbling beneath their feet. It's because they're violating other people's trust. And when that happens, people actually pull away. Life resets daily. With life, there's always a new chance that begins with every day. Actually, every minute you can decide to have a happier life. As crypto technical analysts, we scientifically track investor attention. I spent a lot of time on the psychological aspects of trading and investing. That's all in this real wealth area. Having real wealth is critically important. If you don't have that, your profitability will be 5% of what it could be. Rule 225, Bitcoin cannot escape the stock market's gravity. When we look at the business cycle, and this is a major driver of economics and the stock market and of course crypto, we can see we're in mid-stage, getting towards expansion, and late stage. We're quite a way away from recession. Looking to the main stock market, we can see that we had a big spike in fear yesterday. And what does that actually mean? In the last trading session, when we have a spike in fear, a spike in the VIX, it means that prices come down. And what have we seen? Some very interesting action. Although price came down, it's starting to come back up. It's almost finding a bottom. When we look at bond prices, they're starting to normalize, they're starting to come back up. And when we look at bond yields, they're starting to normalize as well. There's an inverse relationship mathematically between bond prices and bond yields. We can see with the price of gold, gold was under resistance, but it's managed to push through, basically blast through that resistance, and now has turned that to support. The next level of resistance is 1863.30. So what's happening here? What we can see is the DXY, the US dollar currency index, is making its way down. And we've been talking about this for a week or so now. It's quite likely that the US dollar will make its way back to support between 99.187 and 101.195, but it will take a while. I was mentioning that oil was coming up like this, for example, coming up, and I said all price moves in a wave, and what did we see? That wave down. But this is in an uptrend. Oil is going up, it's past resistance and it's being supported. Just keep that in mind. When we look at the put-call ratio, we've seen a little bit of change in here. Very, very high bearish sentiment. It looks to be rolling over, but it's very, very early. It could kick up again. It's also helpful to get an eye on how Bitcoin is behaving. That's the yellow line against the major indices, the Nasdaq, the S&P, the Japanese stock market, Australia's stock market in blue, Germany's stock market, the UK, the FTSE, China's market and Russia's market. The UK market looks to be doing actually quite well at the moment. At this part of the business cycle, inflation becomes something to worry about. And of course, naturally, this is the case, but we've had so much quantitative stimulus injected, so much money supply injected into the economy. Inflation has been going rampant. But what do we actually see here? The annual inflation rate has come down to 8.3%. And when we look at the Fed balance sheet, a lot of commentators are saying the Fed balance sheet is going to reduce. We've actually seen a kick up in the Fed balance sheet. What about the CPI? It's starting to roll over. What about M1, M2? They're still continuing upwards. But it's really interesting to note that the 5-year and 10-year break-even inflation rate are both decreasing. This is really, really good because the Fed's actions are all about we need to bring inflation down. The market is bringing inflation down already. Masterclass students, you'll get my live chart in TM4. We can see that the gold price and silver price are starting to turn around, and the inverse DXY can give some sort of hint as to where these precious metals are going. Masterclass students, you'll get this in TR23. A lot of people have found the sector analysis to be useful, so I'll keep on including it here. When we look at the sectors of the US economy, energy is up, utilities, consumer staples, and the rest are negative. What are the worst performing? Consumer discretionary, financials, communication services, information technology, and industrials. Let's dig a little bit more deeply because just those percentages are really hard to contextualize. When we look at energy, we can see energy is just on a rampage. It's just going for it. And there's many reasons geopolitically why this is actually occurring. And if we look at the utilities index, it's starting to lose its support. It may rally again, but this is quite weak. If we start to see these recessionary indicators starting to break down below their supports and turning them to resistance, that could mean another upward momentum is coming in the stock market. And we know that Bitcoin cannot escape the US's gravity. So that's fantastic. That is really, really positive for Bitcoin. So what are we seeing here? Energy is strong, but it's having a lot of trouble breaking through this particular area. Utilities are potentially weak, but they may bounce. It's too early to tell. Consumer staples, with inflation coming down and people feeling more confident to get out back into society and spend money on things that they want, but not necessarily what they need, we could see consumer discretionary start to pop up. And this weakness in consumer staples is really, really interesting. Let's have a look at healthcare. Healthcare is always on the cards. People get sick, so they need healthcare. When you look through these kind of statistics, a lot of people say, I just want one indicator that tells me what's going on. It's kind of like you need to be a detective. You need to stack all your probabilities, and then you'll form a picture. And the more you do it, the better you'll get at it. We can see financials coming down. Technology also coming down, but it's leveling out at an area of support. We may see a bounce here, more than likely. And industrials, they're coming down, but maybe forming a higher low. Again, things are really, really early. We have to keep our eye on this. The fall off in consumer staples is really, really interesting. This may point to a turnaround. Let's just keep our eye on things. If you're into the stock market and not into Bitcoin, something that can really help you understand the markets, Bitcoin is a highly volatile market and it often signals the turnaround in the stock markets. That is, Bitcoin repairs first. What I've done is to just put Bitcoin's price action, Bitcoin's fingerprint into all of these particular analyses, because what we're trying to understand is how Bitcoin is moving in comparison to the sectors of the US economy. And why do we look at the US economy? Why don't we look at something else? Because the US economy is the giant in the stock market. Most of the money globally flows into the US market. I'd be really interested in your thoughts. What do you see as happening or coming up with these particular sectors? Recently, there was a lot of stress on the Chinese property market with defaults going left and right. And Masterclass students, you'll get this live chart in TM5. What have we seen? A big rebound. We just trade the chart in front of us. We can see that the sentiment inside the Chinese property market isn't one of doom and gloom. It's actually the opposite. We can also see that 69% or 1,435 companies have actually beat their earnings. But what does this mean? When companies beat their earnings, they're coming in with stronger figures, stronger profitability than the market expected. And that's good. But why is it good? Because the market, the stock market, is based on earnings. Applying Rule 45, no alt can escape Bitcoin's gravity. Just as Bitcoin cannot escape the stock market's gravity, no alt, your beloved alts, can't escape Bitcoin's gravity either. We've had so much fear inside the crypto market. A lot of people are unsure what to do. How I look at the crypto market, it's here to stay. And why is that? And I'll show you some really interesting articles a little bit later on. The crypto market is actually the upgrade of the internet from Internet 2.0, which was read and write. And you had companies like Amazon, Facebook, which is now Meta, Google, and others making an absolute fortune from the internet. With Web 3.0, which is all about what cryptos are about, you have an ownership layer. You can directly own the next evolution of the internet of value, or the internet of money. A lot of people don't understand what crypto actually is, but that's what it is. It's the ownership layer for the next evolution of the internet. When we look at the crypto fear and greed index, when fear is coming off the charts, it's just exploding. Price is going down because people are fearful and they're selling. And who are they selling to? They're selling to someone. And we can see recently we had an incredible level of fear, 8, and the actual markets went up. This could be signifying that Bitcoin is about to turn around. And what else could it be signifying? That the markets are about to turn around, the stock market. This is why people in the stock market must look at Bitcoin. I put a little poll out each day on Twitter, and I said, in the next 24 hours, where do you think Bitcoin is likely to head towards? Up towards 32,000 or towards 25,000. About 60% of people thought it was coming down. It's in fact come up. It's actually trading right now at 30,182. And there's some really interesting stuff happening. The total transfer volume in loss of Bitcoin with a 14-day moving average from Glassnode has absolutely and utterly spiked up, way more than the COVID crisis, way more than capitulation. We've not seen this before. And it's probably because so many new people are in the crypto market. As the crypto market grows in size, we're going to have larger and larger realized losses when losses occur. And we can see back here to the COVID crisis, we had a lot of realized losses, but that's nothing compared to what we had when the China miner exodus occurred. And what we've seen is a number of black swan events that have pushed price down artificially. When we look at this, this may mean the probability, statistical probability, is that we may see some more downward pressure, but it also signifies that we're coming close to a bottom as well. This is why, as crypto technical analysts, you need to make in advance probabilistic choices. What will you do with your portfolio if price goes for you, goes against you, or just goes flat and goes nowhere? You must have answers to those three questions. We talk about this every day. It's really, really important to know what you will do. And you don't have to go all in or all out. You can scale in or you can scale out as well. In the comments, please let me know how you're thinking about your portfolio now and what steps you're taking. Turning to Bitcoin, we can see Bitcoin is trading at about 30,200, just wobbling around a bit. What did it do? It came down to A. It found a level of support and then it bounded back to almost 1. And we can see these levels of support and resistance are quite powerful. It didn't come down to B or C or any of the other letters. It stopped at A. And you can see we've been bounding between 1 and A for actually 6 days. What does this actually mean? We've had a very, very strong sell-off, but it's not being pushed lower, especially to this very important level of C. And we'll come back to what C has been updated to in a minute. What does this actually mean to you? Please let me know in the comments. What it means to me is that there was a lot of sell pressure after we broke this particular support, and then we came down, and the sellers have not been successful at pushing the price lower. The buyers are coming in and they're buying, and they're really buying. Basically, A is strengthening as a support level. When we overlay the NASDAQ 100, what do we see here? Price came down in the last trading session and then continued to go down, but Bitcoin held up. What's actually happening here? Isn't Bitcoin supposed to be not able to escape the stock market's gravity? This is where knowledge comes in. When we talk about that particular rule inside the masterclass, there is a corollary or an exception, a star on that particular rule. And what we actually see is Bitcoin tends to turn around first. This could actually mean that the markets, the US market, is starting to bottom out, because Bitcoin is a very, very risky asset. And when people get their faith restored in Bitcoin, they're also getting restored faith in the markets. This is why knowledge is absolutely critical to obtain. Small things can make a big difference. Let's have a look at the longs and the shorts. When we look at the shorts in red, the shorts were trying to push the market down, but did not succeed. They've been liquidated. And we can see the longs have been leveling off as well. But this is just in response to the short liquidations. Let's have a look at liquidations across the past 24 hours. We've seen 259.54 million in liquidations across 77,560 positions in the last 24 hours. Of all of the total liquidations, 57% were long. What about 12 hours? Nearly 77% short. Derivatives are very, very nasty for just new investors and traders. You're better off learning everything that you can, becoming consistently profitable, and then leverage trading if you don't mind wiping out your account, because that is always potentially on the cards. So if we look at the last 4 hours, we see about 57% long liquidations, and the last 1 hour about 84%. Let's get a deeper picture over time, and we can see the shorts outweighing the longs in terms of liquidation today. And yesterday it was the exact opposite, but it didn't make much of a dent in price. There's a lot of buying interest around this area at the moment. And you can see it in Bitcoin futures open interest. We've had a spike up in open interest. So now this kind of price momentum is starting to make more sense. An interesting thing here, I've just put the DXY on, and what you can see is there's a bit of a directional correlation between the DXY and Bitcoin at the moment. And don't forget, this is the inverse DXY. As the DXY was absolutely going ballistic, Bitcoin was coming down, and now the DXY has started to fall. Bitcoin is coming up. It's really interesting that you will find that the DXY go in and out of alignment. Sometimes they move together, sometimes they move inversely. Just beware of this. It doesn't throw a tremendously strong signal. It's been throwing a good signal of late, but sometimes we get variances where things don't actually go this way. For example, the inverse DXY was coming down in alignment with Bitcoin, but it just went horizontal and Bitcoin went parabolic. Just bear these things in mind. When we look at bond prices, this may also give us a bit of an indication as to what might be happening. We can see bond prices start to normalize. You saw that in the 8 charts that we went through before. And what do we notice about this? Sometimes bond prices can be a leading indicator of where Bitcoin might go. Just always think of yourself as a crypto detective. You're just collecting facts, collecting evidence. And what is that evidence telling you? Where do you think we'll go? Do you think we'll go into the numbers, or do you think we'll go into the letters? And one important thing is, what is this letter C, and why is it so big and impressive? It's big and impressive because it's the lower bound of exponential price action that's captured by the Bitcoin KS model bands. And this band that I put together actually captures the bottoms quite well. It even caught the COVID low quite well. We could get a piercing through, but it's been pretty good. And we've had so many black swans that have hit the market. And a lot of people have said, is this particular indicator available on TradingView? It's available to the Masterclass students when they get to TM2, as is the KS model as well. Now, what is the value of this indicator? You can see it over here in red. It's 25,307.16. So that means we need to change this one from 25,452 downwards. I'll just do that now. So I've just moved that down a little bit. You can see that the KS model is a real-time model. Something else which is really important to understand, the cryptocurrency market relative to the stock market and the bond market is really, really tiny. It's a fraction of those main markets. So of course it's influenced by their gravity. But crypto is all about the ownership layer of the next generation of the internet. It's not going anywhere but up. And it has decades and decades and decades to play out. Many people think that crypto is a fad or crypto is some kind of movement. It is some kind of movement in many ways, but it's actually also much, much more. It is the ownership layer of Web 3.0, where you can read information on the internet, you can write to the internet, and you can own it. And we can see, in terms of its adoption cycle, we are so very, very early. And if the actual market penetration just coincides with the internet, and there's been some analysis that puts it at more than the internet, if that is the case, we have decades to play out here. Why do I raise that? Because a beloved community member said, Ken, can you please look at this particular article? Crypto Meltdown exposes hollowness of its libertarian promise. And you might say, what's a libertarian promise? Glad you asked. Libertarians seek to maximize autonomy and political freedom and minimize the state's violation of individual liberties. So it's basically saying, government, be gone. This particular journalist says, to its advocates, cryptocurrency is, at its heart, a libertarian project to free mankind of the shackles of government. Actually, to institutions and smart money, it's the next evolution of the internet, Web 3.0. It's not to say that there's not a lot of people in the crypto market that really don't like government. So this particular author says, oh, look at what's happened. Bitcoin and Ethereum have come down 50%. It's just not safe to put your money in. He also says that Bitcoin had 13 years to make its case, but it just comprises 0.2% of international remittances. Fantastic growth opportunity there for Bitcoin. Go Bitcoin! He also talks about El Salvador, and it's less than 5% of sales conducted in Bitcoin. Wow, what massive growth can occur there too. The author argues that crypto makes day-to-day transactions more expensive, not less. Bitcoin ATM fees can range from 7% to 20%. Why would you go to an ATM? Why wouldn't you just conduct it peer-to-peer or through an exchange? This is really, really interesting. It's really interesting that this article goes on to say there are, of course, profound differences between stocks and cryptos. Stocks have intrinsic value. They are a claim on the company's cash flow. And being trained in finance and doing a finance degree, yeah, that is correct. That's what stocks are all about. They're all about earnings. I hear this argument a lot, and I just think it's because people don't understand how the crypto market works. Of course, if you hate crypto, you're not really going to look into it, are you? Let's have a look at Ethereum. Over the past 30 days, Ethereum made protocol revenue of $561.9 million. That's over the past 30 days. Ethereum was coming down in value, but it made more than $500 million in 30 days. What about when we look at 90 days? 1.4 billion. There is, of course, money to be made in crypto and money flowing in crypto. And if we look at total value locked in DeFi, it's currently $111.03 billion. And I've seen it so many times. People say, everything must compete. Stocks compete against crypto. Stocks exist, crypto exists. They're not competing with each other. They're just different asset classes. Why must everything be about competition? The unfortunate thing, when people compete, they do so based on a concept that there's scarcity. Either you get it or I get it kind of thing. And that's really backward thinking. That's the only way I can say it. The truth is that the pie is big enough for everybody, and everybody can grow the pie. They don't need to fight with each other. They just need to innovate. He goes on to say that stocks can go to zero and investors can lose fortunes, but those risks are mitigated by regulations. Being in financial markets for more than 30 years, I've lost big amounts in the stock market, and that's because companies have actually done the wrong thing, and there's nothing you can do. The regulations do not protect individual investors. They just don't. They're supposed to, but they don't. And there's been a lot of comments about runs on stable coins, and I always laugh when I hear that, because if you look at the stock market and you look at the banking industry, for example in Australia, Financial Claims Scheme, FCS, which provides financial protection to depositors of up to $250,000 per account holder per authorized deposit-taking institution. This is really, really interesting. If you had millions in the bank and the bank went belly up, they'll pay you out $250,000. And this would seem like a rich person's problem. Hey, look, that $250,000, I wish I had that in the bank. but it actually says something important. When organizations or government agencies or reporters say that banks are guaranteed, it's not true. They're not backed. In 2020, 2 years ago, this analysis, all of the world's money and markets in one visualization from the visualcapitalist.com, fantastic piece of research. It said that 7% of the money supply is physical. Just let that sink in. 7%. If you went to the bank 2 years ago, and there's been enormous money printing, the physical component is probably 1% now. Just 2 years ago, it was only 7%, 93% non-physical. Talk about bank runs. If you go to your bank and you say, I want to withdraw 50,000, 100,000, 200,000, they'll say, come back in a month. We need to find the money in other branches. That should give you pause for concern. In the US, deposits are actually protected by the FDIC, and that's only up to 250,000 per depositor per insured bank for each account ownership category. And there's some really interesting sub-points to this. Sometimes banks own other banks, and if other banks fail and you've spread your money across other banks, you'll get a check for 250,000, even it's in for other institutions. So there are loopholes in all of this stuff. I can see a lot of emotional heat in this particular article, which is not really the best. When we talk about anything, everything has a plus and a minus. We can just discuss it in a neutral way. So how is the crypto industry dealing with this? FTX exchange launches stock trading on its crypto platform. Hey, SEC and regulators all around the world, if you force crypto platforms into regulation, they're going to take over the stock market as well. Go for it. And actually, what does that mean? It means, for example, here in Australia, if you want to invest in stocks, you typically have to go through your bank, or there's other places you can go, but the banks is generally the easiest. And they charge up to $30 per transaction. And that means if you want to buy, you spend $30 buying. If you want to buy on a crypto platform, it's like a fraction of a cent or a fraction of a dollar. Just keep this in mind. What is this actually going to do? The crypto industry is comprised of some of the smartest people on the planet. Absolutely. It's all cryptography and advanced mathematics. And they look at this as a challenge, and they say, okay, regulators, I'm with you. Let's actually get regulated, because if you want to make cryptos a security, we'll get in front of you and we'll do stock trading. And then it's easy because they're already regulated to do that. Sam has just done an incredible thing with FTX Exchange, and they're very, very large, a rival to Binance. This is the future. This is the way. And what are the stable coins doing? Because there's a lot of pressure being put on stable coins because the government doesn't want to depeg its US dollar. Stablecoin Tether boosts US Treasuries, cuts commercial paper holdings in Q1. Tether, the world's largest stablecoin, boosted its holdings of US government debt by over 13% to, wait for it, $39.2 billion. This is what I always said would happen to crypto. Crypto needs to come into the fold, but it does it in a very innovative way. This is why I wanted to show you how small crypto is, how many decades crypto has to grow, what it is. It's Web 3.0. It's the internet. The government tried to shut down the internet, believe it or not, in 1993 and before, because it challenged the postal communication services, and they were basically government owned at that stage. And they said, you're going to take away our money. Nobody will use a stamp. And they were right. Who uses a stamp anymore? But it's created so much wealth in other areas. It's kind of like the horse and buggy. Yes, the horse and buggy is a nice ride, but once it was the dominant form of transportation. And you can see Bitcoin and crypto has grown exponentially. It needs to be put on a log chart because it's exponentially growing. It has fulfilled its promise as a medium of digital value, and it will continue to do so. Let's have a look at Bitcoin options expiring at the end of May. We can see the max paying price of $34,000, and that's above the current price of around $30,120. We can see put bets, and they literally are bets. They're people going into the market, and often they just sell the contract itself, sell the options contract if it improves in value, and they don't worry too much about the underlying asset. But what you can see here is the max paying price is at $34,000. If we actually go towards the end of December, we can see a lot of people becoming very, very bullish on Bitcoin. Actual prices up to 300,000. This doesn't mean it's going to happen. It just means it's a bet that people are placing. But people are really, really bullish towards the end of the year. Looking at the top 20 cryptos across the past 14 days, we can see Tron is out in front, but all of them have been hit negatively. Over the past 7 days, for the top 100, KDA is up 64.45%, MTL up 58%, Kava nearly 52%, Mana nearly 52%, and CVC nearly 36.5%. Leading the bottom of the pack is CRV, CVX, Cell, HNT, Cello, Waves, Near, Quant, GNO, AVAX. Turning to the top cryptos, we can see Bitcoin's price action. This is on the 15 minutes, so we're just zooming in here. We can see it's overcome a level of resistance. It's come back, retested that resistance, and resumed off. It has a lot of support through this 29,900 mark. Just keep that in mind. What we're doing here is just trying to enhance pattern recognition. We take Bitcoin's fingerprint and turn it to blue, and then see how it compares to the other alts that we go through. We can see Ethereum is just a little bit weaker than Bitcoin at the moment, but it's still following Bitcoin's directional bias. This is the important thing. Is it following Bitcoin? So is Binance Coin following Bitcoin? Yes, it is. When we look across these cryptos, we can see something really interesting. I'll just point it out to you. Bitcoin is going up like this. You can see Bitcoin's gravity here, Bitcoin's fingerprint. But what is happening to the other cryptos? They are actually experiencing a bit of a down leg. Now, what does this mean? I would suggest that this is a flight to safety. People are actually looking at Bitcoin as a safe haven. This could be really useful to you, but let's discuss it in the comments. It's always good to discuss things. We talk a lot about getting on the right side of the percentage, and when you think about it, Bitcoin is currently 127.9% to the all-time high. Ethereum 142%. Let's have a look at BNB, 127%, XRP, a modest 838.9%. This is live data. Solana, 408% approximately. ADA, nearly 500%. Good old Doge, 760%. DOT, 450% roughly. AVAX, nearly 400%. Tron, TRX, nearly 300%. You can see that if they just go halfway towards their all-time high, they're going to go up a lot. In percentage terms, that is. And we want to be on the right side of that percentage. Let's see if that flight to safety trend is continuing. Let's have a look at Near. You can see that flight to safety occurring here. And in Matic, Icon starting to buck the trend. Icon saying, I want a party. VRA also bucking the trend. These two are exhibiting strength, and that's what we always want. Rose, flight to safety. Rune, flight to safety. IOTA. When I say flight to safety, I mean people are putting their money in Bitcoin, and potentially what they're doing is taking it out of these alts. IOST, but all the alts are still coming up. If Bitcoin comes up, the alts will come up also, just to greater and lesser degrees. Checking out Sand, we can see that flight to safety occurring in there. What about Axie, obeying the same kind of thing? Decentraland Mana, Gala, Engine Coin, Ape, all doing the same thing. Chiliz, SLP. This is why it's so important to understand how Bitcoin's gravity impacts your beloved alts. If something is happening to your alt, 99% probability Bitcoin is doing it, so keep your eye on Bitcoin. After we've gone through the alts, please in the comments just select 2 alts that you think are interesting and maybe have a little discussion on why you think they're interesting. These are all community favorites, and discussing it between yourselves is a really, really good thing to do. Having a look at Theta. Theta is just obeying Bitcoin's gravity, but we see this divergence. T-Fuel showing some strength. This is why you want to look across the market and try to get a really good indication. SHIB has been retracing as Bitcoin has been going up. So there's that kind of flight to safety. EGLD, same kind of thing. Phantom, looking like it's putting in a bit of strength here. Could be interesting. CHR, still wobbling around a bit. And we've got a divergence here. What about Loopring? LRC looks to be putting in a bit of a fighting shot here as well. You can actually see the more you do this, the more charts you look at, the better you will be at understanding the crypto market. And Atom is seeking to get above resistance. Of course, when these cryptos get through their resistance, that's going to be very, very interesting to watch. We can see Stellar coming down, Bitcoin going up, but the gravity is always obeyed. Let's have a look at CRV, showing a lot of weakness at the moment. What about Anchor? Anchor coming up. Arweave, AR, just doing that divergence at the moment. ZIL is looking quite good, actually. And Uni is starting to show strength in there. Tron, looking really good. And FTT, or FTX token, also moving in alignment with Bitcoin's gravity. You can see it going up and down, but some degree of divergence. We've just looked at the patterns of 40 particular cryptos. Please let me know which 2 interest you the most from a trading perspective. Remember, we're just all about BORSOGing. We want to buy when it's red and sell when it's green. BORSOG. It's a very, very good method to apply right now. And one thing that you may also like to take advantage of, you can put your buy orders into the market and spread your support level buy orders way down as low as you can go. This will ensure that you have dry powder in the market. You don't need to go all in and more, because if you do so, you'll run out of money to buy those beautiful, magnificent dips that occur. What is always required in this market is knowledge. If you don't have the knowledge, you're going to make losses. And it doesn't matter how much money you have, you will lose money, because the market's fee for tuition is loss. And when you understand that, things become much easier to understand and contextualize. It's all about learning. And when you go through and mark up your chart correctly, look at outside trends, see growth, potential, network effects, collect probabilities, go back into the crypto market and find the focus, enhancing your pattern recognition. A lot of particular YouTube channels will do deep dives on one particular crypto and say this will absolutely outshine Bitcoin. Bitcoin will fall and this crypto will go up. You know, that's kind of not the case, and we look at it every day, and we've been doing it for quite a while. I do spend a lot of time on Real Wealth because crypto technical analysts are professionals. They're unemotional. They understand the ways of the market, and the way of the market is as prices coming up, everybody is super happy, but when it goes down, people scatter. This is the best time to get into the market when everybody else is leaving, because you can see you're already on the right side of the percentage. Back here, that's where we want to be. And it's not easy to do, because emotionally you will feel like running. All the news will say, run, run. Everybody says run, run, run. And why? This is the question you need to ask yourself. It takes a long time to learn how to buy these dips and how to actually participate and have enough money to get into them. And if you're all out of dry powder right now, that's okay. That's just fine, because you'll find the markets will improve. You know, we've got decades to run. If you have picked good quality crypto projects, you know that they're going to stand the test of time. I'd like to thank Pablo for sharing. Ken, your videos have made a big impact on my confidence to buy at the best opportunities. Thank you. Thank you, my friend. I actually did buy the crypto COVID crash at 4,600. At the time, I had been studying crypto for 2 years. Well done, my friend. Logically, I knew it was the chance of a lifetime. Even knowing that, I have to admit, it was terrifying to buy. I should have bought more, but I only bought one. It actually takes enormous courage to buy the red. After all, everyone is fleeing. It's the end of the world. Well done, Pablo. Really, really good work, my friend. I'd also like to thank Badger for your kind generosity. And also Pablo for your kind generosity. Very nice of you. And what you will find, our community is very open and willing to discuss different points of view, and everybody is incredibly supportive. I hope you found the content useful. Please consider sharing and liking this video and also subscribing to the channel. We'd love to have you as part of our globally extended KS family. Thank you very much to our moderators for keeping our community safe from scammers, and the CTKS ambassadors for mentoring masterclass students. And of course, a very big thank you to you for watching and for being part of our global KS family. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, even on my honeymoon, please subscribe to YouTube. I've left helpful links in the description of this video, such as the masterclass, our NFTs, 20% off on the tax software I use, and you can always directly message me on Twitter at any time. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care, and see you next time. Bye for now.